2025 has unveiled a series of astonishing moves by billionaire investors that are reshaping global markets and leaving retail investors struggling to keep up. In an environment dominated by volatility, inflationary pressures, and geopolitical upheavals, the world's elite have executed bold, often secretive trades that signal where the smart money is heading. These aren't your average market plays. They're calculated, often contrarian, and backed by deep insight and access to privileged data. As governments around the world rethink fiscal policy and central banks fight to rein in inflation without triggering recessions, the billionaires have already repositioned their portfolios, making billion-dollar shifts while the rest of the world hesitates. This video will take you deep into these trades, who made them, why they made them, and what they reveal about the direction of the global economy in 2025. Let's begin with a name that never fails to make headlines: Ray Dalio. The founder of Bridgewater Associates has always believed in the power of diversification across asset classes and geographies. In 2025, however, Dalio stunned Wall Street by doubling down on gold and emerging market currencies while cutting exposure to U.S. equities. His reasoning? A strong conviction that the U.S. dollar's global dominance is waning as nations like China, Russia, and Brazil accelerate their push toward de-dollarization. Dalio's hedge fund discreetly acquired over $12 billion worth of gold ETFs and physical reserves while making strategic currency swaps with the Chinese yuan and Brazilian real. This isn't just a bet against the dollar, it's a macroeconomic thesis suggesting a realignment of global economic power. Meanwhile, Cathie Wood, the outspoken CEO of ARK Invest, made a radical shift in strategy that baffled even her supporters. Known for her ultra-bullish stance on disruptive innovation, Wood surprised markets by selling off major stakes in Tesla and Coinbase and reallocating over $7 billion into AI-driven biotechnology firms, some of which are still in clinical trial phases. Her belief? That artificial intelligence will revolutionize healthcare faster than transportation or finance. She claims the next trillion-dollar company will not be a car maker or a fintech startup, but a biotech firm that cracks longevity and precision medicine. Her timing is calculated, coinciding with recent regulatory fast tracks for AI in medicine and massive institutional funding into neurogenomics. Not to be outdone, Ken Griffin of Citadel has been quietly constructing what some analysts are calling the most aggressive short positions against European sovereign debt since the Eurozone crisis. In confidential investor briefings, Griffin highlighted the unsustainable fiscal paths of countries like Italy and France, especially in light of rising energy costs and stagnating growth. Citadel's $15 billion bet involves complex derivatives, credit default swaps, and macroeconomic hedges, all designed to profit from potential defaults or currency devaluations. This is classic Griffin, leveraging high-frequency intelligence and geopolitical forecasting to capitalize on macro dislocations before they make headlines. Let's now turn to Jeff Bezos, who, despite stepping back from Amazon's daily operations, has made headlines through his family office. Bezos Expeditions. In the first quarter of 2025, Bezos allocated $8.6 billion into space infrastructure firms, specifically those working on satellite-to-blockchain communication systems. It sounds like science fiction, but Bezos believes the next frontier of financial security lies in off-planet digital infrastructure. In tandem, he also bought strategic land assets in remote Arctic regions, land believed to be rich in rare earth metals needed for quantum computing and advanced battery storage. The moves have raised eyebrows in DC, but Bezos appears unconcerned. For him, the future isn't just global, it's interstellar. Over in Europe, Norwegian billionaire Kjell Inge Røkke has made an unorthodox leap from oil to green finance. Through his investment firm Aker Horizons, he's funneled over $5 billion into carbon capture startups and ocean-based renewable energy. But here's the twist. Røkke is also shorting traditional ESG funds, claiming they're too bloated with corporate greenwashing and lack true environmental impact. He's instead backing tokenized climate credits that run on blockchain, a high-risk play that could either collapse or redefine sustainable investing. His bet aligns with new EU regulations, pushing for transparent, decentralized ESG metrics. giving his portfolio an early mover advantage in a yet untapped market. And then there's Elon Musk. Never one to follow the herd, Musk has once again upended expectations. In early 2025, through his private investment entity, Accession, Musk acquired a controlling stake in a Swiss-based quantum AI firm that specializes in neural network defense systems. This isn't a typical tech investment. This is about weaponized AI for cyber defense. And Musk intends to merge it with Starlink's infrastructure. At the same time, he offloaded $4.2 billion worth of Tesla stock and quietly bought back $1.7 billion of Twitter shares, sparking rumors of a major rebranding or possible delisting from public markets. Insiders suggest he's building a closed-loop AI ecosystem where finance, communication, and security are controlled within a Musk-led super app. Warren Buffett's moves, as always, are cloaked in simplicity but packed with strategic depth. In 2025, Berkshire Hathaway made quiet purchases of major logistics hubs in South America, particularly in Brazil and Chile. Ostensibly, this looks like a bet on emerging markets. But Buffett's play is really about controlling trade flow routes as the Panama Canal faces unprecedented drought-related disruptions. He's also doubled down on insurance, sensing a global shift in climate risk pricing. By acquiring AI insurtech firms in the US and Europe, Buffett is preparing for a decade where underwriting won't be led by actuaries, but by real-time climate data. Finally, we come to the shadow realm of investing: family offices, offshore trusts, and sovereign wealth funds that rarely disclose their full holdings. In 2025, these entities have moved decisively into infrastructure privatization. From ports in Africa to toll roads in Southeast Asia, private capital is scooping up strategic assets with long-term inflation protection. The Abu Dhabi Investment Authority and Singapore's GIC have led the charge, but US-based family offices like the Soros Fund and Walton Enterprises have followed suit. These moves indicate a shift away from volatile equities toward cash-flowing real assets with geopolitical resilience. What does this mean for the average investor? It's a wake-up call. The smart money is no longer reacting, it's anticipating. Billionaires aren't just trading stocks. They're positioning themselves for a future where money, power, and influence are increasingly global, digital, and decentralized. The key takeaway: pay attention to where the billionaires are going, not just what they're saying. Their trades in 2025 are more than investments. They're signals, and the market is listening.